Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Tuesday, the 3rd of July. Well, let me say this. Happy birthday, America, for the 4th. We are going to not be here, obviously. We're going to be celebrating along with all of our American Market Club members, so enjoy the day. Today, in honor of America's birthday, we'll be looking at a red-hot American market. Yes, corn. Corn, that's right. It's been on a tear lately. We haven't touched commodities, but this is lately, but we want to look at it today and see how our trade triangles coped with this amazing market. We'll also be looking at 3 stocks today that gave monthly trade triangle buy signals, and they're pretty important ones, so we want to show that to you as well. So let's get started with the S&P 500. Now, today is a very abbreviated trading session, as you're probably aware. We're going to be closing at 1 p.m. today. So here we are. This is today's action right here. And there's not a lot of enthusiasm in my mind to push it up, not a lot of enthusiasm to push it down, kind of a neutral day. I think next week, not the end of this week because we're trading Thursday and Friday, but next week we'll be more active and we'll get a real trend going in this market. I still think with our trade triangles pointing down, I still think that's going to be the major trend as we go forward. So let's go to our next market. Let's just clear the screen here. And we've mixed it around a little bit today just to make it interesting for everybody. So we're not going to show you the same markets all the time. We're going to be actually looking at the crude oil market, which has actually put in a good performance. We had a weekly trade triangle today. There you are on the 3rd of July, 86.91. It's where it is right now. Are we enthusiastic about this market? Yes, it could go higher. You could look at the Fibonacci and say it's going to retrace back to, let's put the Fibonacci right in here, maybe to the 95 level, but there's the Fibonacci, and you can see 95.35 is a 61.8% retracement. I'm not so sure it's going to get there, but you can see our last weekly signal to be short this market came right here on the monthly, and that was around 8. Let me just take this off. This came in around the 98.21 level. The weekly and the monthly kicked in at the same time, so it was a very, very nice profit, $12,000 a contract, very, very nice trade. Crude oil has done very, very well for us. And as we've been pointing out, every time we've gotten below, and let me just scope this out a little further, every time we've gotten below, let's put a line chart in here, this level below $80, the market's come back pretty well. You can just look at this very quickly. You can see, and you can see this, the time right here. Boom, up to here, and boom, so far there. Is it going to be a complete turnaround? Too early to tell yet, but I think we have to watch this market very carefully. So let's just clear the screen and go to our next market. And the next market we're going to be looking at is going to be, well, we mixed it up, so we'll see. It's going to be the euro. And the euro is really being kind of a, really kind of an interesting, really nothing market. Let's get closer in and we'll look at this and we'll put our candlestick charts on. So you can see this is like really caught between a rock and a hard place. On the upside, you've got the 127 level, which is right here. We pointed this out yesterday, 127. That's like really resistance. And on the downside, you could say 125, but I'm going to say more conservatively 124. But that's where the market's sort of trading right now. It needs something to kick it off its butt, and I'm not sure what that's going to be, and my feeling is it's going to be on the downside. So let's take that off the screen, go to our next market. In the next market we're looking at, let me just clear the screen. The next market we're going to be looking at is going to be, and we'll see, you'll be surprised, silver. Silver is really not acting badly, not acting well, but I can't get enthusiastic. We have both of our weekly and monthly trade triangles in a negative mode, plus 55, which we know means a trading range. So that's where we are right now. We are overbought right here, and I think that's going to be definitely a negative for this market. So I think for the time being, it looks like it wants to go higher, but it's a lot of resistance right around this area where it is right now, right around the 28.50 to 29 area. I think that's going to be like a very hard thing for this market to get over that level. So let's go to our next market, which is going to be gold. Gold, much the same case. It's obviously putting in a good performance today. but you can see it's had these good performances before, and it really hasn't got anywhere. So I think this level between the 1640, 1625, 1630 level to 1640 is going to be a real problem for this market to overcome right now. I still think it's probably building a base to go higher later on, but certainly our trade triangles, the monthly and the weekly negative, minus 55, is not a good thing. So we're stuck in a trading range, as you can see quite clearly. Going to our next market, and it's copper. Copper's put in another good performance. However, we think that's going to run out of steam, and we had our Fibonacci level in here earlier, so we just draw that in, and you can see right around, we touched the 50% retracement. 363 is about a 61.8% retracement. I think that's probably going to be as much as we wrote. I think this is going to be very interesting to see how we perform around this 355 area. But, I mean, you can tell the market made a turn. And just to look at this very quickly, you can get an idea of what we're talking about. And let's get a red. There we go. So you can see basically there's the kind of pattern, double bottom, and this sort of pivot point we pointed out. So you've got this movement like this. So that was the move up, first reaction, came back down, tested the lows, did not go through. As you may remember, we were looking for this market to go down to the 310 level, but it had to go really close below the 325 level, which it never did do. And of course, we've had this big rally up that was based on Europe. So I think for the moment, the momentum certainly is maybe on the upside. You've got the daily and the weekly on the upside. Only the monthly is negative, giving you this score, which is plus 70, which is really kind of bouncing between a trading range and a slight uptrend. So let's see how that plays out. And let's go to our next market. The next market we've been looking at is going to be a lot of markets to cover today. By the way, this is corn, and this is what I wanted to show you. So let's scope this out a little further. This is 6 months, and let's go year to date. Well, it gives you a good idea. There's the corn. Let me just see if we've got, you know what, I think I have the wrong contract up here in corn, but no problem. Let's just put the new contract in there. Let's just go back to, yep, let's put, it's easy to find these things, even if you don't know the symbol. Just put corn in here, and it shows you all the corn. Now we want to look at December corn, so I'm going to scope this down here, and there's December corn. Now we've got this one up here, but it's really, this is the one we want to look at. So let's just take a look at that, because the volume is much better. There you go. That's what we want to look at. So here we are. We've got the, you can see where the weekly kicked in and the monthly kicked in, but very, very well. Even if you just looked at our, take the weeklies out, and you can see there's the monthly kicked in all the way back here, caught the move down, kicked in again here. But if you take that away or you filter it with the weeklies, we actually on futures, we use weeklies for timing, daily for timing, and weeklies for trend. So it's a little bit different because futures tend to move much faster. But in our World Cup portfolio, which will be showing you the results next week, has done extremely well. I mean, this move alone, if you look at just where the weekly kicked in here, let me just take the Fibonacci off here so I can show you. But right here at 544, the market's trading at 672. That's over $2 profit. That's over $10,000 a contract, just in a matter of really, literally weeks. So, nonetheless, obviously you've heard of the drought situation in corn, very important. For the corn to begin tasseling. It's really a problem here. If we don't get any rain, this corn could go much, much, much higher. So let's take a look at our next market. Next market is Coca-Cola. Obviously, we made a new high there. It looks very, very good. And next market, Procter & Gamble. We talked about Procter & Gamble recently, and that isn't acting so well. It's in a downtrend. So let's just go to our next market, and we're going to go back to our portfolio. And we want to look at the wheat and the soybeans. So the soybeans, obviously, this is the wheat market, but you see the wheat, huge base came out of it. Buy signal is 719.50. Market is trading at 807. That's about that's about $4,500 profit in this position alone. We're going to be, as I say, showing you our World Cup portfolio all members have total access to these portfolios, and you would have got the signal before this happened with MarketClub's World Cup portfolio, and we'll have the results for you next week on that. So looks really, really good. So plus 100, strong upward trend, nice base it's coming from again. So that's what we want to look at. And this is soybeans. Soybeans has been also in an upward move, and you can see if you look at this very simply, I'm going to draw a couple of lines here just to show you what I mean. But this is a very important element right here, just drawing this line right across here. You see these two levels here are the same. So you could measure basically from this level here, which is 1400, down to the lows. We'll go be a little bit conservative. We'll go to a 1150. So all you have to do is take 1150 from 1400, and that gives you 250 points. 250 added to here gives you 1650 on the upside, and we're 1470 right now. So this market still has a long way to run technically on the upside. So plus 90, strong trend, closing very well for a Tuesday. Obviously tomorrow's closed. Thursday we're open, Friday open. Watch this market on Friday, because if it closes really, really well, you want to be long for the weekend. So let's see how that plays out, but let's clear the screen and go to our next market, and that's going to be, we've got a couple of other markets. Actually, what was interesting today is that Apple hit $600 for the first time in quite some time. Let's take a quick look at that market. So let's scope this in closer, just to get the last 6 months. So there you have it. And you see how markets tend to build bases. Things just don't suddenly happen overnight. They tend to build energy. And we talked about these energy fields before, and you can see how Apple just sort of came back down and started building this energy field. And of course, you've gone over the recent highs here. This is today. We just hit 600 on the upside. A little bit of a pullback, but nonetheless, this market that's a good sign for Apple that it wants to go higher. So let's clear the screen, and let's take a look at one of the things that tracks corn, oil, and everything else, and that's the CRB index, which is something we really want to follow very closely, and it's right here. So let's look at that right now. So there you have the CRB index. One thing I want to be cautioned, it looks like it's off to the races. It's pushed up by the grains and also crude oil. But if we put in our Fibonacci numbers from the highs, recent high, remember how we do this, scope it down to the lows, and you can see the 292 level is going to, I think the 292 to 295 level, possibly even 300 is going to be really a challenge for this market to get much higher. But we'll see how it happens. Nonetheless, our monthly trade triangles are negative. Only our weekly and daily are positive. So intermediate term traders should either be long this market using very tight stops with our dailies, or be out of the market. The monthly long-term trender should remain negative on this market, and hold stops. So let's see how that plays out, but the market would have to go quite a bit higher, certainly over the 310, 315 level for the monthly trade triangle to get excited on the upside. So I don't think that's going to happen. But the other thing too, I want to leave you with this thought for the July 4th holiday. Check this out. It's personal one-on-one club, MarketClub coaching. Is it right for you? If you haven't called us yet, give us a call. I think you'd really enjoy talking to one of our consultants. And it's a free consultation. You've got nothing to lose. The phone call is free, 877-219-1482. Do it before the holidays, before you get involved with the barbecues and all the fun and festivities and fireworks that take place. But give them a call today. I think you'll really enjoy talking to them and seeing how this can benefit you. And that's the whole point between one-on-one Market Club coaching. It's to benefit you. So give us a call. It's a free consultation, 877-219-1482. The call is free. You've got nothing to lose. Hey, this is Adam Hewison. Have a great 4th. We'll be back on the 5th, and we'll be doing our 1-hour show, of course, on that day. So tune in for that show. We appreciate your help. Have a great day trading, and enjoy the holiday.